Hi everyone, welcome to today's video. So on today's video, I'm going to have a discussion with you regarding one of the top multi-bagger sectors in India as per my opinion. I'm going to break down all the data, help you understand this complex industry, and finally, I will tell you my top 3 investments in this space. And if you're looking to invest in this industry, then how you should go about doing that. So which industry am I talking about? I'm talking about this industry. Take a look at this chart and look at the impressive growth rate. From 2014 to 2019, the industry grew at roughly 11.5%. Now it is set to grow roughly at 12.5%. So this is the entire industry growth rate. But if you're picking winners in this industry, their growth rate will be much more impressive. Now the problem is that the specialty chemical space in India is a very complicated industry. Every time I speak with people regarding specialty chemicals, people have a very hard time understanding and grasping the concepts around what exactly are specialty chemicals. Are they like raw material, raw products? Is there any margin or pricing power that these companies have when they are trying to sell this raw material oriented goods? So let us try to break down this industry. So I have structured this video into 3 parts. One, I will help you in very easy to understand language what specialty chemicals are and give you an industry overview. Second, I will speak about why this industry is booming and is set to grow quite explosively in the coming few years. And third and finally, I'm going to talk about my investments in this space and how you could consider taking some positions in this industry. I will keep this video short to the point, so please understand all the arguments. I will explain it in a very easy to understand language. Okay, so let's begin with what specialty chemicals are and the industry landscape in India. Now, the easiest way to understand specialty chemicals industry in India is to look at this particular chart. So if you zoom in and see the x-axis, you will see a bunch of different things. For example, the specialty chemicals are used in specialized polymers, additives. They are used in textile chemicals, surfactants, agrochemicals, water chemicals, cosmetics, construction, flavors, fragrances, this, that. The bottom line is this, that specialty chemicals act as a building block to industrial growth. That is plain and simple. They are used across a range of different industries, right from agriculture, construction, perfumes, and a range of different industries. It is a very complex industry. It is very difficult to understand what specific products every company is making. Are they making polymer or pesticide-based chemicals? It's super complex. So there is no point in doing it. A better approach for retail investors is to understand the broad landscape that exists in this industry. Now, here is a chart for you of the major players that are there in this industry. I would request you to pause the video. Just go through this list. This was a study that was done by Motilal Oswal Services and Bloomberg. And here you can scan through the list of top players in the specialized chemical industry in India. Now, let me also very quickly explain you this data, that here the most important data is the market cap data. So market cap simply indicates that how big is the specialized chemical firm. And this is a very important concept. I'll explain it to you why the market cap of specialized company is also a very important consideration when you are making investments in this industry. So anyways, you need to understand the size of this industry, and generally the top 7-8 players are fairly big in India. So please remember this point. Don't worry about the rest of the data, what the growth rate or projected growth rate of these different companies is, for the simple fact that these are estimates, and estimates can go wrong and they can go horribly wrong. So look at the IPO valuations of a bunch of IPOs. And also comment below if you would want me to do a video on LIC IPO. I'll be happy to do it. I just want to gauge the interest because I don't do too many IPO videos. So just to quickly summarize the first section, there are 2 very important things that you need to remember. The first key thing that you need to remember is that specialized chemical space is highly complicated. All they are simply doing is that they are providing raw materials for the growth of different sort of industries. This includes agriculture, pharma, textiles, and bunch of different industries. So specialized chemicals in one single sentence acts as a fuel or a raw material powering up the industrial growth of our entire nation. Second key thing that you need to remember is that the size of the firm in which you are going to invest in the specialized chemical space, that becomes very important, and I'll explain you the reason for this subsequently. Now let's move on to section 2, where I'll help you understand more as to why this space is growing and what are some of the primary reasons and why is everyone talking about the specialty chemical space. Now there are 4 specific reasons why there is so much bullishness in this industry. The first reason is the nature of the Indian economy itself. So essentially speaking, we are a consumer demand driven economy. Now, there are 2 different types of economies that exist. One is a consumer demand driven economy and the second is export based economy. And a great example of this would be India versus China. Now in India, what happens is that India is not an export hub to the world. There are only few selected products that we export in bulk numbers, and we would be considered competitive in those spaces. But majorly, we are an import-driven economy. Why? Because there is so much of demand that is generated within India itself. This is not a bad thing. Probably I'll make a separate video on this, that why you don't need to get super stressed about import-export equation. But for the purpose of today's discussion, you need to understand the fact that majority of the industrial raw material goods that are produced in the country, they get consumed within the country itself. Very less part of it gets exported outside. Now, this situation is very, very different from that in China. Now, what happens in China is that China is an export-driven economy. Up until a few years back, China was a very heavyweight player when it came to specialized chemicals industry. What was the reason for that? A bunch of different reasons. One is that the labor cost in China used to be low, so the production price of this industrial raw material type of good was not super expensive to begin with. But slowly what happened, that China grew, their economy picked up, and accordingly the labor rates in China also went up. So their specialty chemicals industry became less competitive. Other hotspots in the world, for example, India, Vietnam, they have taken a lot of share away from the Chinese manufacturers of specialty goods already. But the point to note is that even when China was at the top of its game in specialty chemicals, it used to export quite a lot of this stuff. Now, the good thing about India is that because we are a consumer demand-driven economy, a lot of raw material that we are producing within our borders, it will get consumed within our borders to fuel growth. Now, here is a very quick case study on this entire topic regarding tire industry in India. And here is a picture. You can take a look at this and read the third point. There were recent import restrictions on various classes of tires. Now, as a result, what happened? That domestic players like Apollo, C8, MRF are planning to ramp up production as the tire industry is expected to witness considerable growth by financial year 23. Now, in order to support these tire manufacturing firms, what do you need? You again need specialty chemicals, and a lot of the specialty chemicals that will be produced in India will get consumed by these domestic players itself. Now, this industrial growth is supported by the macroeconomics of India. For example, you will see a bunch of good things. For example, we have high working class population, our per capita consumption across product categories is very low, and Make in India is happening, and a bunch of other good things are happening. So macroeconomics also supports. So the entire macroeconomics supports the narrative that specialty chemicals are going to produce, and a large part of it will get consumed within India. So there is a lot of support from the government also for these type of businesses right now. This brings us to the second reason. Now, this is a very interesting reason that we currently are net exporters in specialty chemical space. Now, here is a chart that you can see, and you will see that petrochemicals building block, we are self-sufficient. Petrochemicals intermediary, we are net importers. Bulk chemicals, we are net importers. But specialty chemicals, we are net exporters. Now, if you aggregate point 1 and point 2 now, what do you see? You see that, okay, number one, we have very high specialty chemicals demand in India because industries are growing and they need specialty chemicals too. And right now what is happening is that we are the net exporters of specialty chemicals. So if the industrial demand picks up domestically also, internationally also, like US, Europe, if people want to avail Indian specialty chemicals, then it's a great deal for specialty chemicals companies. Now you'd say, Akshat, can you explain some logic behind this as to why this situation might persist? Because all these foreign locations like US, Europe, Canada, they might start structuring new contracts with other specialty chemical players. So why is it that this situation might sustain? Okay, great question. So here is the answer. Now here are the labor rates in India compared to other countries. And the bar graph that you see, it indicates the minimum and maximum. So in India, the minimum labor rates per month tend to be around $60 per month, right? Roughly $2 a day. And maximum, it's around 258. Now, this is a very interesting situation because if you consider the absolute bottom numbers here, you will see that India's labor rates are almost 50% low compared to any other major location where specialty chemicals are being manufactured. So this gives a lot of competitive advantage for specialty chemicals players. But you'll say, Akshat, you know what? Why are these companies not paying $258 to laborers? The point is that in India, that doesn't happen. Even law firms that are supposed to defend the law, they hire interns for free and get their own work done for free. If you don't believe me, go and speak with students who are studying at law school and ask them that how many of them are getting paid internships at law firms. Many of them will say that they are working for free there. So do you think that the labor laws in India are that extensive? The answer is no. So this situation is unlikely to change in the next few years, and therefore our specialty chemicals industry, which is exporting to foreign locations, will still stay competitive. Now, the the third reason why there is so much bullishness in the specialty chemical space is that specialty chemical space has something called as very high barriers to entry. Now, if there is some new company, for example, if I decide to start my own specialty chemicals thinking that, you know what, this industry will become really big in the next 5 years, let me open up a factory. Then the point is that I will have a very hard time doing the R&D to make my products viable because they need to go through a quality check. For example, any European country or US country that is importing specialty chemicals from India, they will have certain stringent requirements. Now, getting the approvals, bringing my product to a certain quality will become really, really difficult for me in a very short span of time. So I can't enter this space. Okay. Second key thing, the existing contracts tend to be sticky. Now, what do I mean by sticky? So sticky simply means that, now, for example, let's say that alkylamines, which is a specialty chemical producer in India, it has existing contracts with certain US firms. Now, those US firms have already signed a long-term contract with alkylamines, and those contracts are not going away. So this becomes a problem for a new player like me to enter and win those contracts right on day one or in the first year of operation itself. So therefore, these big specialty chemical players have something called as very high ROCE, return on capital employed. And let me show you some charts also around this. If you take a look at Balaji Amines, it has an ROCE of 35.5%. Now, if you go through the list of all specialty chemicals, all good ones will have more than 20% ROCE because this is a winner take all type of a market. That if you are able to produce really good specialty chemicals for which the demand is very high and the quality is very high, then other people can't enter it and you will still have some pricing power as a manufacturer. Here is a quick chart. You can zoom out and read through this. This will help you understand more about barriers to entry. Now, let's move on to the next point. Now, the fourth reason why people are so bullish on the specialty chemical space is that there is room for margin expansion. Now, what do I mean by that? Now, here is a very quick paragraph. I will urge you to read it and I will read this with you. So, various domestic players are leading the path in forward and backward integration of their specialty chemicals processes to open the door to new opportunities, earn better margin and bunch of different good stuff. For example, VOS Vanity Organics started producing butyl phenols after DN commissioned their phenolic plant. Now, what does this mean? So this simply means that big players in the specialty chemical space, they can backward and forward integrate. So backward integration simply means that they can, if they are producing specialty chemical type A, which, let's say, hypothetically speaking, cater to agricultural industry, they can go forward and start targeting industries upstream. What it simply means, and I'm simplifying here, this is not the correct definition, but just for understanding, I'm simplifying this concept. Forward integration simply means that they move up the value chain to identify new customers and launch different set of products. So therefore, this backward and forward integration, where a big company can jump to an entire set of new clients altogether, there are massive profits to be made by big players. Now, I've told you all great things about this industry. So an obvious question here should be that, Akshat, is there a risk profile here or everything is going to work out? No, it's investment. So things can go wrong. And there are four major risks that I see. Number one, this is a very opaque industry, especially for retail investors. What do I mean by that? I simply mean, for example, let's say Vanity Organics has won some contracts. Now, for some reason, if those contracts do not play out or if there are some legal dispute, legal issues, by the time news reaches you, it will be too late. The prices would have fallen for these type of stocks. Similarly, government might institute new mandates. For example, they'll say that, you know what, labor cost, increase it by 20%. Now this will impact the cost structure of all these companies. Again, these type of news will reach us, the retail investors, last. So again, we will take a hit there. So there is opaqueness with this industry. That is the first key problem. The second key problem is the export risk. Now, the way export works is that sometimes countries decide to ban certain substances, products. They get into trade conflict. For example, in 2016, there was a major trade conflict between US and China, post which the specialty chemical sector in China started declining. So if there are international disputes, then you have to go to WTO to get that sorted. Then it just wastes a lot of time and a lot of business gets killed. So that is the second key problem. Now, third is the technology risk. Now, what is precisely happening in this industry is that companies are coming in. If they are able to break the R&D problem, for example, according to me, there is a company called as NGL Fine Chemicals. I had made a separate video on this. If I can find it, I'll link it somewhere here. It is trying to build its monopoly in certain sub-segment of customers it want to serve. And how it has been able to do it and grow fast is because of the fact that it has really good R&D capacity despite being a small firm. So these new firms can also challenge big players. And if these small firms are able to take away big contracts from these established players, then the stock price of these big players will fall. Now, fourth and final is the legal risk. Now, because these are contract based plays, there will be a lot of infighting, contract obligation not met, this, that, and a lot of infighting that can again lead to a lot of problems for us, and we would not know when the stock price takes a hit. Okay, so which brings me to the final section that, hey, should you be investing in this space and exploring some options? My answer would be yes. This is not a recommendation. Please do your due diligence. My top 3 stocks are Deepak Nitrite, Alkylamine, and Aarti Industries. These are top 3 stocks that I currently hold. But the more I read about this industry, the more I'm convinced that I need to be highly diversified here, because for me as a retail investor, going back and understanding which specific firm specializes in what type of chemical and what industry is it targeting, it is almost impossible. The landscape is changing really, really fast in this space. So the approach that I'm taking now is that, okay, these 3 investments done. Now, whatever positions I'm taking, I'm just spreading it out. For example, I'm buying Fine Organics, I'm buying Vanity Organics, but I'm doing it in very, very small amounts. That's it, right? So I'll over time ramp up my positions, but staying highly diversified in a growing industry is a very sensible move for me, and approaching the entire game from that particular narrative. If you want, I'll make a part 2 of this video where I'll do a comparison between major specialty chemical players. I'll only do it if there is enough interest. So if we hit 20,000 likes on this video, I'm 100% going to do it. So thank you so much. And also check the links in the description box for some of my small cases, which are again focused on specific sectors and areas, which you can explore in terms of improving your portfolio returns. So do like and subscribe, and I will see you tomorrow.